Hello everyone, welcome back to my channel. So today we're gonna learn about something basic about trading, okay? And in the basics, first of all, we learn about candles. What are candles? What is a bear candle? What is a bull candle? What is a doji? And everything about candlestick patterns. So first of all, before going into the market, you have to know what is a candle, what a candle represents, right? What is doji, right? So you need to know what all of these candles are and what all of these candles represent. So today in this video I'm gonna tell you about candlesticks, okay, types of candlesticks, types of bull market candlesticks, types of bear market candlesticks, and some other things. And there's a bonus tip also in the end of this video, so I request you to please watch this video till end. All right, so without wasting much time, let's dive into this video. I hope you guys can see my screen right now. So I'm going to describe first of all what is a candle, what is a bar. Okay, so in trading windows in the market you can see these type of candles, this pattern, green, a red candle and green candle. So what is this, what does this define and what does this define? Okay, why it is red, why it is green? So first of all, the candles are divided, the properties of candles are divided into three things. Okay, the body of the candle which you can see here, the red part, okay, and the wick of the candle which we call shadow. Okay, and the third thing is the color of the candle, if it is red or if it is green, what does it mean? Okay, so we'll learn about that today. So first of all, what is the body of the candle? So here you can see this big green part, this big this big red part and this big green part. So this is the body of the candle. This is the opening price, this is the closing price, this is the lowest price, and this is the highest price. So what is this open, close, low, high? Okay, so we'll discuss that. So opening price is, suppose this candle is generated right here. Okay, this candle is generated right here. The price got low, the price went down, went down, went down, went down, went down and went down till this point. Till this point the price went down, and then the buyers came into the market, and then price again rises, again rises, again rises, again rises, again rises till this point, till this highest point. And then the sellers came into the market and put the pressure over the buyers, and the market closes right here. Okay, so the first of all, the market, this candle opens here, and the price got down till here, and the price again got up till here, and again the price got down till here. Okay, so what happened? What is open price? Open price is simply where the candlestick opens. Okay, the starting point of the candlestick is the open price. Okay, highest price, first of all, open price, you got it, and closing price is somewhere the body of the candle closes. Okay, and the lowest price is the price, the daily, if I'm talking about daily candle. So in a day, how much price got low? Okay, so this is the lowest price, and the price, how much price the candlestick got high. Okay, till how much price it got up. So this is the highest price. So this is the maximum price. This is the opening position. This is the closing position, and this is the lowest price. All right. So I hope you got this concept, and similarly goes for this. Okay, this is the body of the candle. This is the highest price. This is the closing price. This is the open price, and this is the lowest price. So now you must be thinking, why the open price for red candle is up here and opening price for green candle is down here, and the closing price is like why it is opposite? As you can see, the higher price and lower price are same. Okay, so this is the higher price, this is the lower price. So how this candle is made? After that candle, after this green candle, after the next day, the market started from here, right? Because this candle closed here, and the market started right here. Okay, then the market got down, got down till this position and created a low position right here. All right, then it got up, the buyers came into the market pulls up till this position, which is the highest position. Then again the market got down, the buyers came into the sellers came into the market, and the market closes right here. on this day. So this becomes the highest price, this becomes the lowest price, and this becomes the open price because the market opens right here. So opening position for green candle is always below, okay. Open position for red candle is always above, okay. So right here it opens and it closes right above, right here. All right, so these are candlesticks. So this is the basic what a candle is, what a candle represents, okay. So now moving on to our next part. So talking about our hammer candlestick. All right, so hammer candlestick are something like this. You can see a hammer, a short body with a long wick, okay. And you can find out these candles at the top of the market. All right, and this shows that the market is going to go down. You know why? Because there is a very long wick. The sellers are pulling like a lot, right? Because there is a very long wick, but because of the buyers, the market closes right above, okay. So there is a very short body and a very long wick, almost 3 times of this body this wick is long, right? So this is a hammer candlestick. Now moving on to our next candle. So our next candle is inverted hammer candle. Now what does it shows? You can see there is a very short body. It is just inverted to the hammer candle, okay. We have reversed the hammer candle and it has become the inverted hammer candle. There is a small real body, there is a small body, and the wick is almost 3 times or 4 times of the body. The open and close positions are very close, okay. And at the lower end there will be a little or no wick, okay. You cannot see same to same candles, you can see, but not all the times, okay. There will be some difference, like you can see in an inverted candle there will be a small wick, okay. Sometimes there will be no wick, sometimes there will be a wick that will be considered, but it will be almost looking like this, okay. And the upper wick will be extended. So what does this mean? The buyers are pulling into the market. All right, you can see the wick. So you can see these types of candle at the end of a downward trend, okay. Because at the end of the downward trend, if you can see the inverted hammer candle, that means the market will go up from that point. All right, not always, but most of the time, okay. Now moving to our next candle. So now we have a very interesting pattern right here. You can see it is a bullish engulfing pattern. What does it consist? It consists of short red candle and a green big candle. Okay. So what does it mean? Bullish engulfing. The bulls are engulfing the red candle. You can see this green candle is engulfing this red candle, right? It is almost twice big as the red candle. Okay. So as you can see, the buyers came into the market. What does it mean? You can see, first of all, you can see these types of candles at the end of a downward trend, okay. At the end of the downward trend, you can see these type of candles, and this means that the market will go up. There are chances that the market will go up from that point. All right, so this is the length of the candle, this is the opening position, and this is the closing position. This is the open position, this is the closing position, I told you. All right, so moving on to our next candle. So guys, our next candle is morning star candlestick pattern. All right, so this is a very interesting pattern because you can see these type of candlestick pattern a lot. All right, and morning star, as you can see, then as it is defined by the name, it consists of 3 candles: a large red candle with a small doji candle. So this is a doji candle, okay. It is an indecisive candle. That means the bulls, either not the bulls or the bears, has won this battle, okay. This is a draw. So you can see a large red candle and a small doji candle. It can be green or red, doesn't matter, and a big green candle, okay. So this is a whole morning star candlestick pattern. Small body, large green, large red. Sorry, large red, large green. I'm sorry. So you can find this pattern at the bottom of the downtrend, okay. And what does this mean? This simply means that the market will go up from this position. All right. Now moving on to our next candlestick pattern. So our next candlestick pattern is 3 white soldiers. All right, 3 white soldiers. So as you can see, it consists of 3 green candles. one after another. There will be no red candle between these green candles, and this is a strong bull run. This means that the market will go up very high, because as you can see, these are the daily. If you can see in a daily chart, three green candles one after another, keep that in your mind. The market will go up from that point. All right, so it simply means that the market will go up, and three white soldiers simply looks like this: three big fat green candles one after another. All right, so moving on to our next candle. So previously in this video we have learned about the bullish candlestick patterns. Okay, all the patterns that I have told you earlier was the bullish pattern that shows the bullish the market where the price will go up. Okay, now we'll learn about bearish candlestick patterns. Okay, the first of all, we have here a inverted hammer. All right, this is a inverted hammer. Okay, we have learned about this, and this is a shooting star. Both are same. The tail is big, the body is small. All right, so moving on to our next candlestick pattern. So our next candlestick pattern is hanging man candlestick. All right, what is this? This man is hanging right here. Okay, so this candle has a short body and a long wick. The wick has to be 3 times of the body. The wick has to be 3 times of the body, and you will find this at the top of the market in the bull run. Okay, the longer the wick, which means the higher the selling pressure, and the market can go down. So you can see these type of hanging man candle at the top of the market, and if you see these type of candles, just keep that in your mind. The market can go down from there. Okay, so moving on to our next candlestick pattern. So our next candlestick pattern is bearish engulfing pattern. So earlier in this video, I've told you about bullish engulfing pattern. That means that market will go up, and here comes the bearish engulfing pattern. You will see a big fat red candle and a smaller green candle. This candle is engulfing the green candle. Okay, this is almost twice the size of this candle. So what does this mean? First of all, where will you see these type of candles? At the top of the market, obviously, because the selling pressure is very high and the market will go down from this point. So if you see these type of pattern, you can take a short position right here or after this candle. Okay, so the market can go down. The potential of market going down is very high if you see a bearish engulfing pattern. All right, so moving on to our next candlestick pattern. So our next candlestick pattern is evening star candlestick pattern. All right, it is just opposite to morning star. This is evening star. You will find this pattern at the top of the market, and it will consist of a longer green body first, then a doji candle. It can be green or red, doesn't matter, and then a big red candle. Okay, these both candles can be of same size, but you can see there will be a very less difference or almost same, these blue and green candle. Okay, so what does this mean? Okay, so first of all, you can see these candle patterns, evening star candle at the top of the market. Okay, when the market is in bull run, and if you see this pattern, keep that in your mind. The market will go down from that position because the market is losing strength and the sellers are coming into the market. So you can take a short position after this pattern. All right, so guys, our last candlestick pattern is three black crows. Right, so you have seen the three white soldiers, right? Three white soldiers. You have seen the three white soldiers, and this is the three black crows. What does this mean? First of all, where would you see? You tell me. You can see these candles at the top of the market, right? And it will be like this. There will be three big fat green candles, 1 2 3, one after another. Okay, and this simply means the sellers are coming to the market, the buyers are losing the game, and the market can go down from there. So you can take a short position. All right, so guys, in this segment, as you can see on your screen, this is a bullish and bearish strength of the candles. Okay, from this chart you can simply I can simply explain what a candle means. Okay, like this is a green. Okay, these are the reds. though. So this is a green candle, this is very bullish, okay. And if you can see a wick, that is lesser bullish, or like this is also a lesser bullish. Like this have wick at the both of the end, okay. As you can see, there is no wick, there is no wick, and there is no wick, there is no wick, there are wicks with the body, right? So as you can see, as the wick grows longer than the body, the bull or bear strength becomes less. All right. This is the doji candle, okay. This is the doji candle, that is indecisive candle. That means nor the buyers nor the sellers are winning into this candle, okay. This means if you want to take a trade, you have to wait for the next candle. You cannot take a trade right here because you don't know what happened here, right? Because as you can see, the body of the candle is very small. Doesn't matter if it is red or green, okay. The opening price and the closing price is right here. The opening price will be right here, the closing price will be right here, or the open price will be above, or the closing price will be down. It depends on the color, red or green. And the wick of the candle down here is very big, the wick of the candle up here is also very big. So nobody is winning into this market. This is a draw, so this is a neutral, okay. And if you can see a red candle like this, there will be wicks at the both of the ends, so the bear strength is already less, very less, okay. And if you can see a pattern like this, bear strength is less, and this means bear strength is quite there are some sellers on the market, and this is a very bearish. So this is a very bearish, lesser bearish, much lesser bearish, and this is also lesser bearish, and this is neutral. Similarly goes with bullish, very bullish, less bullish, much less bullish, and this is neutral, okay. So I hope you got the idea what does a candlestick, what does a candle represents, right? So that's all for this video, guys. I hope you understood what are candles, what are candlestick patterns, and everything about candles that you needed to know, okay. I have given my best to explain you what are the candlestick and how can you take a position with the help of candlesticks, okay. But do not only use candlesticks, okay, because if you are only using candlestick to take a buy trade or a sell trade, that will be not good, okay. Because it doesn't happen that every time you see a bullish engulfing pattern, that means the market can go up, okay. It can go down, okay. It happens, let me tell you, it happens. Doesn't mean if you can see a bear, if you can see a bear movement, the bulls will not come into the market. Market do not move in the same direction all the time. The market will move up, will go down, and then again will go up, and then again will go down, okay. So the market is very unpredictable. You cannot predict market where it will go, but we can analyze what is the what previously the market is showing us and what we can do, okay, with the help of using our indicators like RSI and EMAs, and there are many more indicators. Or you can use Fibonacci retracement, and if you want to learn about Fibonacci's retracement, I've made a video on that also, so you can see a link right here. So if you want to see that video, you can click here and you can see that. And with the help of with candlestick patterns, you can also use support and resistance, okay. And for support and resistance, I've also made a separate video, so you can see the link over here, so you can see that video also if you want. And there is a playlist of mine where you can see all the videos related to trading on a very basic level. If you want to learn, if you want to start trading, if you want to get into this market, my motive is just to tell you how to fish on your own, how to trade on your own, okay. Because if you are dependent on somebody, if you have a trader for yourself and you have given your money to him, okay, either you can win or you can lose, okay, but you will not learn in that condition. If you are learning through the process, you will grow, all right. So I want you guys to grow. I want you guys to know how to fish on your own, how to trade on your own, how to analyze the market and everything, all right. So thanks for watching this video, guys, till the end. And this is the bonus tip that before getting into the market, this is the bonus tip. Before getting into the market with your real money, with your hard-earned money, use a demo account. Okay, use demo account, use paper account, do the research. Okay, analyze the market, look at the history of the market. Okay, if you are trading in particular particular market, like if you are trading in BTC, look at the 5-year chart, look at the 6-year chart first of all, and then get into it. All right, so trading is totally depend on your skills. Okay, and if you are good at it, i I can give you guarantee that you will succeed. Okay, do not, there is a very thin line between trading and gambling. Okay, so you have to manage that, you have to manage your risk to reward ratios, and you have to manage your risks also, because it will not happen that you will win in all the trades that you will make. You will win, you will also lose, you will also take some losses. Okay, so keep that in mind and be safe, take care, and I'll see you in the next video. Thank you for watching this video. Peace out.